Hi everyone, and welcome to current liabilities, also known as short-term liabilities. Let's start by talking about a definition. Liability, we know, is something we owe. But what do we mean by current? In accounting, current means anything that is due within the next 12 months. The next 12 months or the next year. Okay. Same thing, current assets are assets that we're going to either convert into cash or use up within a year. But we're talking about liabilities this week. So current or short-term liabilities are liabilities that are going to come due within the 1 year or 12 months. A long-term liability is a liability where the due date is more than 12 months out. So we don't have to pay it or perform on it for more than 12 months. All right, let's talk about some common short-term liabilities. By the way, I forgot to mention, this lecture is meant to go along with your worksheet that it's on Canvas. So print that out or have it on your screen so you can follow along and be filling out the notes on the sheet while you watch the video. All right, so the first most common current liability is accounts payable. And what are accounts payable? Accounts payable are the amounts due to our vendor or supplier. So if you think back to when we were talking about merchandising, our accounts payable was the amounts that we had to pay when we were the buyer. Okay, so we've bought on credit, we're gonna pay in 30 days, 60 days, maybe we've got 210 terms, but that's what our accounts payable is. So for example, if we buy $100 of inventory on account, then when the liability is incurred, we're gonna debit inventory debit inventory 100 and credit accounts payable for 100. When the liability is paid, so let me put up here incurred, paid, that says incurred, paid. When it's paid, we're going to debit AP, credit cash. Okay, hopefully most of this is a review at this point, but I wanted to make sure we mentioned it because it is part of this module. All right, let's move on to sales tax payable. I'm gonna go ahead and erase. If I'm going too fast and you don't have everything down yet, feel free to pause or rewind and play it back. That's the beauty of the online lecture. All right, so next we are talking about sales tax payable. Living here in California, you're probably all familiar with sales tax. So when you go and you buy something for 10 bucks, it actually ends up being like $10.78 or $10.80, depending on what county you live in. We have to pay sales tax. The sales tax, the buyer has to pay it, but the seller is responsible for collecting the sales tax and remitting it to the government. Now, why is that? Think to yourself, if every time you went and bought something, you had to keep track, here's how much I bought, here's how much sales tax I owe, and you had to send it to the government once a month, how accurate would that be? Probably not very. A lot of us probably would forget about some of the things we bought accidentally. So the government puts the responsibility on the seller as a condition of their reseller permit. They are required to collect sales tax from their buyers and then send it into the state once a month, maybe once a quarter, once a year. It kind of depends on how much you sell. All right, so It is collected by, so the definition is it's tax that's collected by the seller but paid by the buyer. It's a tax that's levied on purchases, so it's not based on your income, it's based on what you buy, and it's collected by the seller and it's paid by the buyer. All right, so let's go through an example. The example is we sell a taxable service for $100 and the sales tax rate is 8%. So when the liability is incurred, we are going to debit cash. We're going to credit sales for $100. And then we need to calculate our sales tax. So we're going to credit sales tax payable, and it's going to be for 8% of the sales price. So $100 times 0.08 is going to be $8. So the total cash we're going to collect is going to be $108. And to make our debits and credits equal, our sales tax payable is $8. Probably. Okay, that's when the liability is incurred at the time we make the sale and we collect that $8 of sales tax. When the liability is paid, I'm going to go ahead and do some erasing. When the sales tax is paid, we'll send it to the government and we'll debit sales tax payable for $8 and we're going to credit cash for $8. Okay, I think that is probably long enough for video number 1. Come back because in the next video we are going to talk about unearned revenue. All right, see you then.